I'm still bullish on Bitcoin. In the fourth quarter, seasonally Bitcoin strong, but now we have the Fed flipping dovish after being essentially hawkish all year. That's a tailwind for Bitcoin. So I think Bitcoin gets to 200 to 250,000 by the end of the year. And that aligns with Mark Newton's technical targets. Ethereum, as a price ratio to Bitcoin, should recover to its prior, let's say, either average or at least 5-year highs, okay? Mm-hmm. Using a $250,000 Bitcoin, that implies somewhere between 10 and 12,000 for Ethereum by the end of the year.
Tom Lee begins by drawing attention to a startling fact that many investors overlook. Nearly 5 years ago, Ethereum, the foundation of decentralized apps and smart contracts, reached its highest point ever. Since then, neither the significant on-chain advancements nor the increasing institutional interest in it have been reflected in its price performance. Ethereum was trading at about $1,300, much below its peak of $4,800 when Lee's company started developing its treasury strategy. However, Lee claims that Ethereum's fundamentals have only gotten stronger, that its ecosystem is developing, that its use cases are growing, and that its long-term value proposition is still strong. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
I know you've talked about stablecoins being the ChatGPT moment of Ethereum, but what was it that jumped out?
In our view, Ethereum probably is a chain that had become underestimated. It made its all-time high 5 years ago. So when we started the treasury strategy, Ethereum was around 1,300 and its all-time high was around 4,800. But that was a case in our minds where Ethereum's fundamental story was much stronger because number one, it is the second largest blockchain. It's the largest smart contract platform. It has a huge community of developers that, in my opinion, are really benevolent focused. Ethereum is trying to improve the world. But I think people thought of it as less exciting than other platforms. But then along comes not only stablecoins, which we call the ChatGPT moment for crypto, but it's really the realization that this current administration in the U.S., the White House and Congress, are really becoming pro-crypto, and Wall Street itself is embracing blockchains. And the blockchain they're doing most of the work on is Ethereum. So when I look at that combined with AI and tokenized agentic AI and robots are really going to create the need for a token economy for robots. A lot of that will happen on Ethereum. In fact, President Trump today just talked about how he needs proof of human to protect us, and a lot of that work is going to be done on Ethereum. So you have two drivers for what we think are a super cycle. So to us at 1,300, Ethereum was kind of like a massive risk reward. The digital asset treasury world bridges two worlds. One is crypto, because it invests and buys a token. And so you have to be able to speak the language of the crypto economy. But then the other world that treasuries sit in is public equities. And remember, there's 5,700 stocks out there, 5,700. So just because a company does something doesn't mean the market cares. If you look at the stock market today, the top 30 most traded stocks are literally the only stocks that Robinhood cares about, or Schwab, or even JP Morgan. JP Morgan trading probably only cares about 10 stocks, and Goldman's desk only cares about 10 stocks. Institutional investors care about sector exposure, but they always buy the leader. So, MicroStrategy is one of the most liquid stocks in the market today. It trades $3 billion a day. Fortunately, Bitmine is one of the most liquid stocks today. It trades about $3 billion a day. It trades about as much every day as JP Morgan or Arista Networks or Google. We're really one of the most liquid names. And then I learned that in Korea, we're top 1, 2, or 3 in terms of trading volume. So I think that unless you're going to break into the top 30 as a stock, institutions may not pay attention because institutions want to have volatility, access to hedging through option chains, and Bitmine's a top 10 chain. And so if you're not in that zip code, institutions aren't going to pay attention. I'm still bullish on Bitcoin. In the fourth quarter, seasonally Bitcoin strong, But now we have the Fed flipping dovish after being essentially hawkish all year. That's a tailwind for Bitcoin. So I think Bitcoin gets to 200 to 250,000 by the end of the year. And that aligns with Mark Newton's technical targets. Ethereum, as a price ratio to Bitcoin, should recover to its prior, let's say, either average or at least 5-year highs, okay? Mm-hmm. Using a $250,000 Bitcoin, that implies somewhere between 10 and 12,000 for Ethereum by the end of the year. But I do think Ethereum is going to exceed those prior highs, and that's why I think when we get to 12, 15,000, that's what you call, real price discovery, but I don't think that would be the ceiling for Ethereum. Some perspective, in 2017, Bitcoin was under 1,000, and we thought it would get to 25,000 by 2022, but could get to 100,000 a little bit later. Of course, 8 years later, Bitcoin's over 100,000. To us, an intermediate level for Ethereum is matching Bitcoin's network value. So I think a couple years from now, so that would be 60,000 ETH.
According to Tom Lee, only a neutral public blockchain will be trusted by Wall Street, and Ethereum is the only one that fully satisfies that need. Although private organizations or banks may attempt to develop their own closed, proprietary blockchains, those systems will not gain the confidence of other organizations due to their lack of neutrality. Insiders frequently exploit confidential knowledge in traditional finance, and a blockchain under bank supervision would have the same issue. Ethereum, however, is the only reliable basis for a fully tokenized version of Wall Street because it is open, transparent, and decentralized. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
So Michael Saylor is a very good friend of mine. In fact, I spent a lot of time explaining to him and thinking around Ethereum and Bitcoin, and I think we agree Bitcoin and Ethereum, first of all, are friends. We don't compete. But that our strategy is very different. I'm not competing. Bitmine is not trying to get an institution to buy us over MicroStrategy. In fact, we think an institution that owns MicroStrategy also has to own Bitmine because we are different parts of the crypto economy. Ethereum, to me, is the new Wall Street. In 1971, the dollar went off the gold standard. Okay. Now, everyone thought in 1971 the play was gold. But actually, in 1971, the dollar became synthetic. It no longer was backed by anything. And that's when Wall Street stepped in and said, okay, we got to make sure that the euro, the German franc or whatever, German mark or the French franc doesn't become dominant. So Wall Street built products to make sure everyone used a synthetic dollar. Wall Street was the big play in 1971. In 2025, we're making everything synthetic. We're starting with tokenizing the dollar, and then, as you know, Wall Street's going to tokenize equities and everything I just listed. Massive opportunity. Ethereum is in a super cycle because of that, but Bitmine can play a role because it can become a payment rails. It could become almost a bank. It can help by owning, the largest holder of Ethereum today. It's a kingmaker on the DeFi. We were doing moonshots. We invested $20 million into 8Co, which is investing in the WorldCoin, and that already, in just less than 10 days, has already returned more than 10 times our investment. So yeah. I think we are becoming a financial infrastructure company. I wouldn't blame anyone being surprised because we've been writing about Bitcoin since 2017 when it was under 1,000, and at that time we posited that institutional investors would want to own Bitcoin because of its status as digital gold. And today that's really the mainstream narrative. But this year, myself and Mosaics, who helped me engineer this Bitmine transformation, we started to see the possibility that Ethereum was entering a super cycle, something that would last 10 to 15 years. And if that was true, we'd want to have a role in actually helping sort of guide Ethereum and traditional Wall Street onto Ethereum, and that's why we did the Bitmine strategy. Stablecoins are just tokenized US dollars right now, but we're going to be seeing tokenized equities and credit and real estate and loyalty points and intellectual property. Intellectual property is the largest component of US CapEx. That should be on chain. So is it a $400 trillion market and stablecoins are 280 billion right now? I think that there's room for plenty of blockchains to benefit. But I do think the idea of a fat protocol is important for people to keep in mind. That's what Union Square Ventures first wrote about. I don't know if you guys remember from 2011 or 2013, but as stablecoins are created on a layer one, that layer one captures the value. That payment rail concept is the exact same reason banks, as you put a deposit in, the value of the company actually equals your deposits because they make a loan with that deposit. So I think in many ways there'll be room for many blockchains, but the majority of this is taking place on Ethereum.
According to Tom Lee, Ethereum is currently entering what he refers to as a supercycle, which may run for 10 to 15 years, whereas Bitcoin has long been regarded as digital gold and is generally accepted by institutional investors. To enable traditional Wall Street players join Ethereum's platform and facilitate its integration into mainstream banking, his company developed the Bitmine concept. In addition to stable currencies, which are basically tokenized US dollars, Lee highlights that the blockchain ecosystem is quickly growing to encompass tokenized stocks, credit, real estate, loyalty points, and even intellectual property, which accounts for the majority of capital expenditures in the US. He draws attention to the idea of a fat protocol, in which the value generated by all the apps built on top of a blockchain is captured by the underlying layer, just like banks make money off of deposits by making loans. Lee emphasizes that Ethereum stands out as the impartial, open chain that Wall Street can rely on, even though there is space for several blockchains. Lee adds that there will be winners and losers in the digital asset arena, just like in any other industry. The bulk of institutional interest in cryptocurrency treasuries is represented by big companies like Bitmine and MicroStrategy, who control trading volume. Other institutions joining Ethereum's ecosystem will need to stand out and execute well, and involvement in significant indices and passive flows will support valuation stability over time. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.